All right, picture this. You do everything right. You lock in 3% mortgage. I mean, that's the golden ticket of homeownership, right? It's supposed to be your financial shield. But then, somehow, you find yourself on the brink of foreclosure. It sounds completely impossible, but it is happening to thousands of Americans who are supposed to be the safest homeowners in the entire country. Today, we're going to dig into what's being called the 3% mortgage paradox. So how can this be? Really? How can homeowners with this historically low fixed debt suddenly be in so much trouble? The answer? Well, it pulls back the curtain on a hidden crisis brewing in the American housing market. It turns out the fundamental rules of homeownership, they've changed on us. So let's start with this core contradiction. The very thing that was supposed to be the foundation of financial security for millions, that super low, predictable monthly payment, is somehow starting to crumble. That low rate, it just isn't a guarantee of safety anymore. And here's the data. By November 2025, the national mortgage delinquency rate hit 3.85%. Now, I know what you're thinking. That might not sound like a huge number all by itself. But here's the kicker. It is the highest it's been in over 4 years. Something is seriously wrong just below the surface of the housing market. And this really gets to the heart of it. The loan itself, that beautiful 3% rate, it isn't the problem. The financial stress is coming from a completely different direction. So to solve this mystery, we've got to look at the hidden costs of owning a home. And that leads us right to this concept called escrow shock. This term, right here, is the key to understanding this entire paradox. It's the hidden force that's pushing these supposedly safe homeowners right to the edge. You know, think of it this way. Your mortgage is kind of like a subscription with a fixed price, right? But the taxes and insurance, those are the in-app purchases you didn't see coming. An escrow shock is when those in-app purchases suddenly jack up your bill by hundreds of dollars more each month, even though your base subscription price hasn't changed one bit. Your mortgage payment is basically an iceberg. The part you always focus on, the principal and interest that pays down your loan, that's just the small, stable piece you can see above the water. But the real danger, the huge mass of the thing, is the volatile cost of taxes and insurance hiding just below the surface. And right now, that hidden part is growing, and it's growing fast. So what's causing this growth? Well, recent data from Zillow and Thumbtack shows the shocking scale of this problem. The average annual cost for these hidden expenses, we're talking insurance, taxes, basic maintenance, has now hit almost $16,000. That's a jump of nearly 5% in just the last year, which is way faster than most people's wages are growing. And believe me, this isn't some niche problem. We're talking over 4 out of every 5 homeowners are discovering that the true cost of owning their home is way higher than they ever budgeted for. It's like a nationwide financial shock, and it's catching millions of people completely off guard. Okay, so if escrow shock is the what, the next big question is the why. Why are these costs, especially homeowners insurance, just exploding all of a sudden? Well, a massive part of the answer lies in the growing financial risk of climate change. To really get this, we have to pull back the curtain on something called reinsurance. It's actually pretty simple. It's the insurance that your insurance company buys to protect itself from huge losses, like after a hurricane or a crazy wildfire season. So when these reinsurers have to pay out billions after more frequent and severe weather disasters, they raise their prices. And guess what? Your insurer passes that cost directly onto you. That's how you get those higher premiums. And just look at how dramatic and localized these impacts are. In Georgia, they're seeing a nearly 28% jump in premiums because of severe storms. In Colorado, it's almost 26% from wildfires and hail. This isn't just some blanket price hike across the board. It's a direct and targeted repricing of climate risk, and it's happening zip code by zip code. The insurance industry itself is basically sounding the alarm. A recent survey shows that this overwhelming majority of executives are deeply, deeply concerned about future losses, especially from stuff like hail and major windstorms, which in some years are now causing more damage than hurricanes. They see what's coming and they're adjusting their prices right now. So these rising costs, they aren't just theoretical, okay? They are leaving a very clear and honestly a very disturbing trail in the national housing data. So now we're going to follow that trail. And I want you to pay close attention because these numbers, they move fast and they tell a really powerful story. So check this out. In November 2025 alone, over 600,000 borrowers who were totally current on their payments became delinquent. Just think about that. That happened in just 30 days. It's the biggest single-month spike of new delinquencies we've seen since the absolute peak of the pandemic shutdowns. And at the same time, we're seeing this surge in homeowners who are underwater, meaning they owe more on their mortgage than their home is even worth. And here's the most alarming part. Nearly 90% of them bought their homes in just the last few years, right at the very peak of the market. Ouch. And this is where the story gets really serious. As this chart shows, every single stage of the foreclosure process, from the initial start all the way to a final sale, is up by more than 20% compared to just last year. The trend isn't just rising, it's accelerating. So when you put all these pieces together, the escrow shock, the climate costs, the delinquency data, what does it all mean? It means we have to fundamentally rethink our assumptions about owning a home. We are entering a new reality with a very, very new set of rules. So what can you actually do about it? Well, first, you have to start budgeting for volatility, not just for that fixed mortgage payment. Second, you got to understand that your zip code is now a direct reflection of your financial risk, and you need to be aware of this emerging climate trap. And it is a brutal scenario where rising insurance makes it too expensive to stay, but falling home values in that same risky area mean you can't afford to sell and leave. You're just financially trapped. And this is the final thought I really want to leave you with. For generations, right, the American dream was built on the stability and the predictability of a fixed-rate mortgage. But if the real cost of keeping that home, the insurance, the taxes, the climate-driven repairs, is now this volatile, unpredictable variable, what does that mean for the future of that dream? It's a question I think we're all going to have to confront.